Microstrategy is out with its latest earnings report. The company posted an impairment charge of $24.1 million on its Bitcoin holdings in the second quarter. Well, that hasn't stopped shares from rising. They're up 15% in the past month. And joining us now to discuss is ProChain Capital President David Tawil. Welcome, David.
Hey, Lawrence. Good morning.
Good to see you again. I got to ask you about MicroStrategy here. We probably have different opinions on it, of course. This is a company that's gone and it seems to have abandoned what it does and is focused on hoarding Bitcoin at this point. $4.5 billion worth of Bitcoin on its balance sheet right now. I don't even think its market cap it adds up to what it used to value the company itself, plus the added Bitcoin. So at what point do investors say, you know what, there's an ETF coming out, potentially. There are other ways to invest in crypto other than hoping Michael Saylor can leverage into the capital markets and buy a ton of Bitcoin?
That's a great question. Said differently, does MicroStrategy, as it currently exists, as it seems to be going, have a finite shelf life in light of the developments in the sector? As of now, we don't have the spot Bitcoin ETF in the United States. We've got a lot of clamoring. MicroStrategy still fills a need, let's say, in the marketplace in some way. It's certainly, easier to buy and sell than GBTC, and it's obviously operated somewhat differently. And on top of that, the most significant point out of yesterday's earnings call from MicroStrategy is the fact that they may go out there and raise an additional $750 million to buy more Bitcoin. So as long as we've got this disjointed system of how, in fact, people can invest in Bitcoin, there seems to be room in the universe for one MicroStrategy.
But here we have a situation that they might go out in the capital markets and try to borrow that money. But things are a lot different than when they first started doing that, and that is interest rates have gone up significantly. I mean, when I look at interest rates, you look at the Fed funds rates, it's a cliff up, right? And it's a different world when you have to have that hurdle rate there than when they started this, when you had 0% interest rate. Do you think that this basically makes it not only a lot harder, but a lot more risky than what they did before?
I'm sorry, I didn't mean to have my mouth open there. I wasn't aware. Are you sure that this is a debt offering of $750 million as opposed to a stock offering of $750 million?
Even if it is an equity offering, nonetheless, you still have that hurdle rate. You still have to overcome a certain amount of. You still have to have a certain amount of return to overcome what you're putting your money in, and that's taking extra risk. It's not the same as it was before.
You could make that you could have and can still make that argument for the entire market, which hasn't traded down despite 500 basis points of rate raises. So I don't know. Yes, academically, that point is incredibly valid. But in practice, that has not worked out that way. And frankly, Michael Saylor is a great salesperson on top of everything else that he does. And so therefore, if he can go ahead and raise enough rabble to go ahead and get people to put in another $750 million to allow him to buy more Bitcoin, he will, and all the power to him.
I'm old enough to remember.
I'm
old enough to remember the nonsense from 23 years ago. I'm old enough to remember that. And hard to trust him after that. That hurt.
Understood. I understand.
As many as 6 entities now have applied for futures-based Ether ETFs. Curious what you think about that. It's also kind of interesting because, we just had this report from Coinbase saying that basically the SEC told them that everything was a security except Bitcoin, which, kind of would include ETH. But I'm just curious what your take is on that news.
I don't take much by way of that news, except for the fact that everybody in the ETF business needs to find the next act because they went through so many years of growth. And, we seem to be somewhat ETF saturated at this point. Clearly, even if 6 are approved, 6 won't survive. There's probably space in the world for 1 or 2 of them, certainly, so that traders can go ahead and use it to correlate with other trades in their book. But I think it's just about the product offering and being able to offer as an ETF provider a full suite of products. And so therefore, it is what it is. Any flavor you can come up with, ETF folks. I have a good friend actually that works in ETF land as a lawyer, and they're constantly regurgitating the same ideas over and over in order to go ahead and seem busy, make filings, and go ahead and satisfy their bosses that they are in fact doing things. It's one thing to create, it's one thing to paper, and then it's another thing to in fact go out there and sell and gather the AUM. And I think that that's really the hardest part because the rest of it is just commoditized.
All right. Well, thanks so much for that, David. We're completely out of time. That was ProChain Capital President David Tawil.